Hey guys, I'm Mr. Financial, and in today's video, I'll share how much our $146,000 portfolio paid us in summertime, baby. Let's do this. Before we look at our dividend income for the month, here's what our portfolio's dividend calendar looks like. January, April, July, and October are the really big months. February, May, August, and November are only our monthly payers, and March, June, September, and December are about half of the big dividend months. In June, we received dividends from 11 of our positions: Fortis Inc, Manulife Financial Corp, Enbridge Inc, Pembina Pipeline Corp, Brookfield Corp, MCAN Financial, Fiera Capital Corp, Canoe EIT Income Fund, Smartcentre Real Estate Investment Trust, RioCan Real Estate Investment Trust, and First National Financial. This is how we do it. I'll go through each dividend we received, adding up our totals along the way, starting with the smallest payer in relation to our total dividend income on the year. Our smallest payer was from Brookfield Corporation. It paid us $10 and a whole cent. Brookfield provides us with 0.4% of our annual Tfsa income. It has a dividend growth streak of 12 years with a 5-year CAGR of 8.4%. Our second distribution was $23 from Canoe EIT Income Fund. It provides us with 2.9% of our yearly dividend income via its monthly 10-cent distributions. I hope to offload this one soon. After 2 paychecks, we hit $33.01. Next, our OG utility, Fortis, paid us a dividend of $76.70. This gives it a weighting of 3.2% of our yearly dividend income. Fortis is Canada's second dividend king with 50 years of dividend increases and has a respectable 5.7% 5-year CAGR too. After 3 paychecks, we're at $109.71. By the way, investing friends, do you know why the European stock markets are sliding down? Greece! Back to our dividends. We received $79.56 from MCAN Financial. This represents 3.4% of our annual dividend income. Hopefully, MCAN Financial can keep up its 3-year dividend growth streak at its 5.1% 5-year CAGR. After 4 paychecks, we reach $189.27. Now, for our 5th largest payer, we received $88 in dividends from Manulife Financial Corporation. Manulife Financial provides us with about 3.7% of our annual dividend income. Not only has Manulife been growing its dividend for 10 years with a 5-year CAGR of 9.9%, it still has a very reasonable 42% payout ratio. After 5 paychecks, we rocket past $200 at $277.27. Guys, have you heard about the latest offer from Moomoo? While Wealthsimple offers 4% per annum for cash accounts with funds under $100,000, Moomoo is stepping it up with an incredible 6% per annum for funds under $10K for 60 days, along with other great perks. Sweet deal for one of the best US stock trading brokerages out there. To get this limited time offer, just use my link below, whether you're in Canada or the US. Our 6th paycheck was $113.96 from Fiera Capital Corp. That represents 4.7% of our annual dividend income. With its AUM still under a lot of pressure, I do not see this reinstituting its dividend growth program for quite some time. At nearly the halfway point, we are at $391.23. Our next dividend received was $118.68 from Pembina Pipeline Corp. It pays us 4.9% of our yearly dividend income. It now has a 3-year dividend growth streak after its 3.4% dividend increase. Its growth has been muted with a 3.5% 5-year CAGR. With 7 paychecks, we're at $509.91. Our second biggest pipeline, Enbridge, paid us $162.19 in dividends. It represents 6.7% of our annual dividend income. It has a 29-year dividend growth streak and a 5.8% 5-year CAGR on its dividends. It looks like oil and gas are coming back into favor. Let's see what this means heading into the back half of the year. After 8 paychecks, we reached $672.10. Have you noticed how our portfolio is slowly adapting the closer we get to financial freedom? Check out our latest portfolio update to see all our latest moves in June, right up there in the corner. Next, we were paid $60.36 in distributions from SmartCentre Real Estate Investment Trust. It provides us with 7.5% of our annual dividend income. The payout has been a stable 15.42 cents for 4 years now. It'll need to show some growth soon to combat the pesky fly of inflation. With this monthly distribution, we hit $732.46. For our second biggest payer, we have our other mortgage finance stock, First National Financial. We receive $68.87 in dividends. It provides us with a large portion of our annual dividend income at 8.7%. It has an 11-year dividend growth streak with a 5-year CAGR of 5.3% on its dividends. With our 10th paycheck, we crossed the $800 mark at $801.33. And lastly, our other REIT, RioCan Real Estate Investment Trust. It paid us a distribution of $70.58, providing 8.9% of our forward yearly dividend income. At near a full position size, this will drop down to about 5-6% at full build out. RioCan has a 3-year dividend growth streak going strong. So after all 11 dividend payments, our grand total is $871.91. Want to know something cool? That's the equivalent of $29.06 a day, or an hourly wage of $5.45 tax-free based on a 40-hour work week. It is nice to see the year-over-year comparison to June 2023. That year we had $706.62. So our income grew by 24%. We're on track this year for 16% growth without adding any extra funds. Woohoo! Our 3 largest dividend payments accounted for $394.83, or 45% of our dividend income for the month of June. We are building our portfolio with a focus on the quality of the company and dividend growth potential for when we're financially free. We aim for a chowder score of at least 12 with our dividend growth stocks. In the month of June, we had 4 dividend increases. Just kidding, it was another goose egg. There was one notable dividend raise in the Canadian market though. Empire Company Ltd. raised its dividend 9.6%, giving it a 29-year streak. We ended the month with a forward annual dividend income of $9,628 with a yield on cost of 7.94%. We are inching closer to that $10,000 mark. With $47,000 to deploy in our TFSA this year, I anticipate we will finish this year with a forward yearly income of $12,000 or $1,000 a month tax-free. Not too shabby. Thank you so much for watching and stay tuned for our big dividend month next month. Ciao for now.